I'm just going to cut straight to the chase. It looks like Bitcoin could be in deep shit with this chart setup that we've got right now, and I'm going to show you exactly why in this YouTube video. You see, Bitcoin has managed to fall down below its crucial $61,000 area of support. And if you have been paying attention to me on this channel, then that in and of itself is not super worrying, right? We already know that we have a lot of space for Bitcoin to continue to drop even down as low as even 59,000, 58, maybe even 57, because of that potential deviation where the price drops below our critical areas of support, but is okay and then makes a recovery up. I do not think that this is the situation Bitcoin is in, and I'm going to show you why in this YouTube video. And I also want to show you where I think Bitcoin could be going over these next days, and especially into the halving. And before I continue, ladies and gents, I am going to be streaming for that halving, which is going to be taking place in 2 days from now. So if you want to see that, double check that you are subscribed to this YouTube channel to make sure that you get that live stream notification. Obviously, you need the bell icon checked as well. And while you're doing that, ladies and gents, make sure you've got your trading bonuses if you want all of this free capital that these exchanges are giving you to trade in these markets across the halving events, if that's the kind of thing that interests you. Bybit is going to give you up to 30K, which is free money you can trade with. That is free money they'll deposit into your account. Any profits you generate are yours to withdraw. And BingX is also giving you up to 135K in bonuses, and they do not require KYC. There's no pictures of yourself or your ID. So that is super, super cool. Check them both out with the links below. You got to start trading using my links in order to get those bonuses. But let's come back here now. We've got that critical area of support. And one of the key themes that we've actually been speaking about on this channel for our areas of support is how quickly we get the bounces off them, right? And if we take a look at this on the hourly time frame, this is actually going to tell us a lot. A picture is worth 10,000 words in this case, because on the hourly time frame here, as soon as Bitcoin managed to fall below this area of support, it was brought right back up literally within the same hour, and the next 2-3 hours we saw a nice big pump up for Bitcoin, where from this low up to the high that Bitcoin set about 5 hours later was 9% up, which is absolutely beautiful. However, if we take a look at what Bitcoin has done over here, granted we are only in the second hour after dropping down, we are not up by nearly as much. The initial reaction has not been strong. The initial move up has not been strong. It has not been quick. We are continuing to demonstrate that this market does have weakness where it is right now, and that is something I would not be ignoring at this stage in the market. We have fallen below our area of support, and we've already been trading down at these lows for quite some time. This is a very typical chart setup before a much larger dump does end up taking place. So I still think that there's some room for Bitcoin to rise up, but now that we've actually shown weakness at this support level, that's actually going to tell the bulls that if they're looking to buy Bitcoin, they might get better Bitcoin prices lower down, which means that if we do get a recovery, regardless of what happens, if we come back down to this price range or we stay here for even longer, I think a lot of people are going to be expecting better Bitcoin entries based off what we're seeing right here. And again, I'll continue to elaborate on that, because if we've got these areas up here that have already acted as some light support and resistance for Bitcoin, it's probably going to continue to act as resistance for Bitcoin if we get back up here, including this next level up here at about 65K, which we just briefly got above but didn't quite hold. And to me, that is continuing to show that, we've already spent a decent amount of time down here. When we look for kind of characteristics that will show us, if a market can sustain at a certain price level, what you want to see is that as soon as you come back down to those price levels, you have very quick reactions up. Again, it's exactly the same thing we were talking about at the very, very beginning of this video. When you get these quick reactions, that tells you the market's not fucking around. People really want to buy. But when you get this kind of price action and it's not followed by a quick big move up. I mean, this is the move that set the all-time high within 8 days. If we take a look at what's happened here from the drop that we had up until now, granted it's only been 4 days, we have not seen anything near as close of a strong reaction. In fact, Bitcoin is lower than the prior low that it set, which is an extremely strong sign that this market is not particularly strong. And before I continue on with the Bitcoin analysis, we know why this is. The S&P 500, and I've been calling for this for a very long time. Those of you that have been subscribed and tuning into this channel are going to know that one by one, every single note that we've been talking about on the Four Flies channel, especially really for like the last year and a bit, but especially very recently, has been completely on point. In some cases, it's taken a little bit more time than others, but across the board, every single bit of analysis we've been covering with you guys on this channel, live streams, videos, and so on, have been completely on point, and we are seeing it manifest in the most important way so far with the S&P 500, because this is the largest correction that the S&P 500 has produced now since we began this correction in July of 2023. To put that into perspective, that was an entire 265 days ago, or about 8-9 months. So a very, very long time ago, ladies and gents, that Bitcoin has not had a strong correction initiate. This correction ended up lasting an entire 3-month time frame. It took us down by 11% on the S&P 500. And from where we are now down to our low, we have corrected down by 5%. Now, for those of you who are just new to this channel, we've been talking a lot about how the S&P 500 is a very important macro index for crypto, because if we've got all of this ETF hype and we understand that this market for crypto now is mature to the point where it's not people like you and I that are going to be pumping the market, but it's actually those much bigger players, much fatter wallets, much fatter pocket people that are going to be pushing these prices up, then we need a happy macro environment. We have been proven time and time again, I don't give a fuck what YouTube channels you listen to, what brainwashing Twitter gurus you're listening to, we have been proven time and time again, if you pay attention to the facts, which is the only thing you're going to get on this YouTube channel, that when crisis hits, when there's a war between Iran and Israel, when there is a war in Ukraine or Russia, when there's a fucking global pandemic, in every single global crisis type situation, Bitcoin is not the place that people look for safety and security. I'll say that again just to make sure your reality cracks if it hasn't cracked already. Ladies and gents, Bitcoin is not a place that people look for safety and security. However, if people are interested in speculating, and if the global markets are actually looking pretty good and the risk profiles are looking pretty nice to digest, then actually people are going to be pretty interested in Bitcoin. Bitcoin gets treated like a tech asset, like Apple, like Tesla, and so on. And so if we know that we have a happy environment for these kind of assets, then we probably have a good setup for Bitcoin. But if these things are starting to tumble down, then this must not come as a surprise. S&P 500 drops by 5%, Bitcoin from its all-time high drops by 20%. This is standard procedure, ladies and gents, and this is the largest correction we've seen for quite some time now. If we take a look at some of the previous corrections that the S&P 500 pulled off, here's a 2.5% drop. Before this, after this, here's a 1.7. We're just looking at random little drops here. Here's a 2.3. We're not getting big corrections on the S&P 500 overall, which makes this the most significant correction that we've actually printed so far. And that is, again, absolutely fantastic for the health of this index. We've got the previous all-time high. If we just zoom out and take a look at this, the previous all-time high sitting at this yellow line, sitting at about 4,800, and it would be a very nice 8.5% correction if the S&P 500 were to drop down there. So that is something I'm going to be paying attention to in this market here, because if we do manage to produce a larger correction, that's going to be exactly what enables these next big rallies up, right? A lot of people hear my kind of analysis, if they're absolute daft cunts, is what we call them in the UK, and they will think that I am saying very bearish, very, very negative things, talking about doomsday narratives and stuff like that. But if you've got your head screwed on a little bit more like yourself, you're going to understand that the only way we can have our sunshine is if we have the rain before it. Shout out to those of you in the UAE. Here in Dubai, we have had a crazy storm. I have been absolutely loving this Range Rover parked down there, because we have been wading through 1 meter high floods with heated seats on, with massage seats, playing good apocalyptic zombie music. It was super, super fun. The crisis has been crazy across this city. The city has really come together with all of the flooding that happened. Obviously, there was 5 months, by the way, 5 months of London rain, all in one day here in the UAE with this storm. So absolutely crazy stuff. It was super, super, surreal to be watching, and to go on a bit of adventure last night was definitely quite interesting. But if we do bring it back here to the chart. I just thought I'd touch on that because a lot of people have been talking about that. A lot of the crypto players are in Dubai right now for the conferences, which are also complete garbage, by the way, but we won't talk about that right now. I am proudly not attending any of them because I don't have my head stuck up my ass. But anyway, we'll touch on all of that a little bit later on. What I do think is very, very important is if we do manage to produce that larger correction down, we do get the sunshine after the rainstorm, which again is exactly what we had over here. It's absolutely crazy how Dubai was kind of like, there was a little bit of like fog, not fog, but like dust, like things just weren't super nice in terms of the atmosphere here in Dubai before the storm. After the storm, we haven't seen clear skies like this in ages. I mean, it's been so crystal clear, and that nature is a very, very telling sign of what these markets do as well. So we need these pullbacks in order to produce larger bounces to the upside, and that is something which I am particularly interested in at this stage in the market, especially given that the S&P 500 has no support until it gets a little bit lower here, and of course that is probably going to be dragging Bitcoin even lower. So let me talk to you a little bit more about this now. There's a very interesting setup here that I've identified, which I think could be interesting as well. Let me bring this up on the chart for you all. And actually, before I get there, take a look at this one here. It's, again, just the same thing I've already spoken to you guys about. We've got our EMA resistance on the hourly time frame starting to catch up to the trend already, meaning that if Bitcoin does manage to get a rise up, it's just going to face more resistance at this stage in the market, and it's probably going to have to drop a little bit lower if that does end up happening. We've also got, if we go on some of our larger time frames here on the 4-hour time frame, even more EMA resistance at higher price levels right here. I believe that this is the correct chart for that as well. Just showing that even on larger time frames, it's not looking particularly great for Bitcoin at this stage. This 4-hour EMA resistance has been deadly for Bitcoin just over the last week or so, and that is definitely something I'm going to be continuing to pay attention to in this market. If that does continue to serve as resistance for Bitcoin, and it certainly could given where we are. We already understand what happens when we get comfy down at these support levels. That is exactly how you break them. Bitcoin did this on the inverse with its dominance, and I was warning you guys about it for months here. We've seen it play out already right here, where Bitcoin was in a nice big sideways trading range for a very long time, by the way. This trading range lasted 770 days for Bitcoin's dominance, but crucially what you can see is when you get up to the highs up here, we're getting very, very quick rejections. But on this occasion, the only occasion where we don't get those rejections and actually we move up, Bitcoin actually sits quite steady up at this level, showing us that we're actually getting quite comfortable here and we're able to start consolidating, which is the strongest sign that the market produces before it moves to the upside. We did the exact same thing in this range on a slightly smaller scale. Look at how quickly these corrections came in on the Bitcoin dominance, but on this occasion here, we're just holding steady at the top. We didn't do that at any point previously. This is a very, very important thing that I need you guys to understand, ladies and gents, where previously Bitcoin automatically started to get rejected, if not within a day, just within 2 weeks. On this occasion here, from the moment Bitcoin's dominance entered this range to the moment it left this range to the upside, it was an entire 38-day period. There was no 38-day period where Bitcoin was at its highs for its dominance previously, and that shows us how we got very comfortable at these highs, and that's exactly how you start to penetrate them and get even higher. So same thing for Bitcoin's chart in this case, in my opinion, and definitely something which I would not be, failing to pay attention to at this stage in the market. I definitely think a lot of people would benefit from paying attention to these kind of things, because if you do manage to pay attention to these kind of things, you can start to preempt the breaks in the market. And I think what's really interesting is if we do take a look at where Bitcoin's next support might be, we have got this massive daily Ichimoku cloud, and this has been something that I've been speaking to you guys about quite a bit on this YouTube channel, right? This has been generally a very useful indicator for the markets. Here is the Ichimoku cloud drawn out on this chart as well. We've already hit it on this particular Coinbase chart here, but it does stretch all the way down to $54,000. The last time that we hit this cloud was absolutely phenomenal, and we got a really nice move up. And actually, there were some real similarities between now and last time. You see, last time Bitcoin had this daily time frame EMA support, and we managed to collapse below that support into the Ichimoku cloud and bounce up. Right now, we've potentially got a similar setup with the same kind of 5.8% drop which is what we saw down into the same Ichimoku cloud after losing our EMAs. And that is going to lead some people to be a little bit bullish about this setup. But there is one thing which is critically missing on this chart. See, previously, when Bitcoin managed to fall down into the Ichimoku cloud out of our EMA ribbon, which provides us with momentum support, it fell down to a previous area of resistance, flipping into an area of support. That is a very, very important sign, ladies and gents, telling us here that we had some horizontal support on this chart. We do not have that on this occasion. We can kind of cheat and paint those kind of levels on this chart, and you can certainly say that, for example, 48,000, 49, whatever, these are important levels. And you know what, we did produce an all-time high here, right? So you wouldn't be completely incorrect if you said that, but to me, these are not strong enough areas of support. And one of the concepts that I actually aligned with quite closely is that if you manage to lose important strong areas in the market, which in this case would mean the low 60K range, if you manage to lose these kind of zones in the market, that can be very telling that you're going to have to collapse down to the next strong area in the market as well, right? And if you end up doing that, you could be in for a much bigger drop, right? If you're going to lose an important area of support, I'm not going to expect that a weak area of support is going to be able to sustain the price, right? It's like if you've got a really fat person falling through, like imagine they're falling through a building, right? And the ground is all made out of paper. Paper is not going to stop them if the metal broke, right? They're going to have to hit something even harder than metal until they stop collapsing that fucking building, because they've been eating way too many hamburgers out here, these Bitcoin hamburgers, with all that bullish energy in them, making them weigh a little bit more. I don't know what the hell I was getting at there with that really, really weird analogy, but we know that that's what we're signing up for on this YouTube channel, ladies and gents. And so I think the opportunities to be buying might open up at slightly lower levels. And this level is actually particularly interesting, the $52,000 price level, because of the Fibonacci setup here. So take a look at this one here. We've got a Fibonacci that I've drawn here from the absolute low to our high. We've got our 618 retracement sitting here right in this beautiful $50,000 to $52,000 range. It is a further 18% drop from $62,000, which is where we were just a little bit ago. So that would be absolutely beautiful to see Bitcoin kind of falling back down into this range to capture some support off that Fibonacci retracements. We know that Fibonacci retracements have been very, very reliable recently. And I think critically, this entire box, just by sheer coincidence, because these numbers are downright magical, ladies and gents, lines up with the golden pocket for Bitcoin. So do not be surprised if Bitcoin falls down here and actually produces a bottom here. This could definitely be the worst of it, as far as I'm concerned, and it would also represent up to a 30% correction from our all-time high, which is also, a pretty sizable correction, definitely in line with what you would expect within a Bitcoin bull market. Okay, when you start to produce a correction, it is definitely in line with what you would expect there. So if the S&P 500 continues to grind down, that is going to be one of the key levels that I'm personally going to be looking at. And it's also, I think, a pretty good level to be buying Bitcoin at. So shout out to those of you that have taken advantage of the phenomenal offers linked down below. You're going to get huge bonuses when you start trading using my links down below, including a free $500 Bitcoin position just on Bybit. Again, you've got to do your KYC on Bybit if you want to get any of these bonuses, but BingX is a phenomenal alternative with much bigger bonuses, and they also allow you to trade traditional finance markets. So Tesla and Apple stock, for example. You can trade gold, which is popping off right now. If we take a very quick look at gold, absolutely beautiful chart right now, looking poised to continue to rally up in this market here. Absolutely phenomenal stuff. You can trade that here. You can trade Forex, all on BingX. So definitely check them all out, because I think that if you haven't already got those bonuses, you're going to regret not having them a little bit later on. Shout out to those of you that have got them. It is free capital. You can trade with your own money, of course, but what's better than that is trading with money someone else has given you and not having to give them a cut of your profits. That is super cool. So definitely worth keeping that in mind, how it lines up with our 52K area of support with that Fibonacci setup. And if we do drag this thing a little bit lower, I still think 44K is very much on the cards, 48K, potentially 49 as a potential bottom, but a wick down to 44, that would be our maximum 40% correction within a Bitcoin bull market. It is a very easy price level to digest if you really step back and stop being so scared, because this is only where Bitcoin was 70 days ago. All right, so 70 days ago was still in 2024. It's still this year. It was just the beginning of February. The beginning of February was literally like fucking 2 minutes ago. Okay, we're only in the middle of April. I don't know how time goes by this quickly. Really blows me away. But we're not going to be losing much if Bitcoin falls down there, but it would be a complete market reset, I think. Yeah, Bitcoin dominance would probably continue to rise up as well in that situation, at a minimum up to that crucial 60% level that I've been looking at. So that is where I'm going to be interested in seeing Bitcoin finding its way up to. Ethereum dominance has also picked up just a little bit, but it is still looking absolutely horrible, very, very weak indeed, and it does still look like it could be dropping even further. And that is something that I want to talk to you guys about a little bit more, because one of the interesting things that we've been seeing with the altcoin market, this is specifically on Solana, is that it looks like some altcoins, specifically Solana, are actually ahead of the market. We've actually seen Solana print almost exactly the same chart setup that Bitcoin has, which you can see on screen, but Solana is living in the future because Solana has already dumped down, potentially giving us an indication of where Bitcoin might go. This is actually, and I'm saying it like a joke, but this is actually something that we've seen happen before on the charts, and it's actually one of the easiest ways to produce good analysis in these markets, in my opinion. It's not the kind of thing that I show often because it's kind of like a secret tool, but if you appreciate me doing this publicly with you all, do me a favor and smash those likes up. Double check that you are subscribed. You got the bell icon checked as well, because again, that halving live stream is coming in just a couple of days. Right now, it's looking like that halving live stream is 2200 hours, 10 p.m. UTC, London time zone. So I'm going to be keeping an eye out for that. I believe London's actually an hour ahead of that now, actually. But that is going to be something which I really, really want all of you guys in for. It's just going to be a fun thing. We're going to be going over a lot of macro halving analysis and a bunch of other stuff like that. I'm super, super excited for it. But this is something that we've seen before, and Solana has already collapsed below this area. We've seen this, by the way, printed on smaller time frames as well. Actually, one of my recent live streams that I did with you guys, we saw the exact same thing happen with Solana, where Solana was leading Bitcoin on very small time frames, like 2 hours ahead of Bitcoin. Solana produces an ascending triangle, breaks out, then Bitcoin does the same thing 2 hours later on the 15-minute time frame, on the 5-minute time frame. We've seen this before. We've seen it regularly. It's not something that I would ignore in this market, ladies and gents. Definitely something which I think is important. And by the way, we've got continued examples of this with other altcoins as well. So definitely something which I think is worth paying attention to in this market right here. Now, another key metric that I want to draw your attention over to is the fear and greed index. This is not something I've looked at massively recently because there just hasn't been much to talk about, but finally we have a very interesting setup on the fear and greed index, and this is one of the most bullish things you can be getting. You guys got to remember, I do things opposite. Everybody else gets super excited at the all-time high, and you guys were tuned into this channel. You were locked in, and you knew exactly what I was saying on this channel, ladies and gents. I do not get excited by these hype things in the market, right? When everybody else is getting excited, I'm taking a step back. I'm literally taking profits, and I'm telling you guys that I think the market could be pulling back. But when these things start to shift, when these things start to flip and go in the opposite direction, my intention is always to buy low and sell high, all right? A lot of people, they like to play these markets by buying high and selling low, and it is crucially because, and if this is you, I urge you to really fucking level with yourself, grab your fucking balls and check they're still there, look yourself in the mirror and ask yourself, are you in these markets for excitement? Because that's what you're doing if you're buying high and selling low. Are you in these markets for excitement, or are you in these markets to make money? It is genuinely a very difficult, painful conversation to have with yourself, ladies and gents. Trust me, I have been there. It is not an easy conversation to have with yourself in these markets, but you will usually find that if your trading decisions are bad, you are not in this market for money. You are in this market for enjoyment. You are in this market for excitement, and your trades will prove that. You're going to be enjoying the ride. You're going to be excited and hyped and pumped up because of the price hitting all-time highs, and because of that, you're going to be buying at the tops and you're going to be selling at the bottoms on the other side because you've made bad decisions. But if you're like Four Flies right here on this YouTube channel, this kind of thing is going to excite you. We've got a reading of 65 yesterday. Yesterday was a reading of 65. Today's a reading of 67. This is the lowest reading that we've had on the Fear and Greed Index going back multiple months, all the way back to early February. So over 2 months ago, since we've been down at these kind of levels on the fear and greed index. So that is absolutely great, and it really, really does help us to reset sentiment and bring the market back up. I think we can continue to drop both in terms of fear and greed and in terms of Bitcoin, but it is something that we are just going to have to wait and see how it plays out. So super, super interesting stuff here. Bitcoin producing a bit of a correction right now, moving a little bit higher for me. This is just going to be a setup to continue to find support. The invalidation would be either rising above this local high that we set at 64K or this local not so local high at 66K. Getting above either of these levels would be a very strong bullish sign. It would mean that we're no longer setting lower highs in the market. We have clearly been setting a lot of lower highs in this market recently. So if we can get above any of these highs, we're going to stop doing that, and we're going to be able to start looking at the possibility of Bitcoin being in some sort of uptrend. For now, though, I'm not going to place my bets on that. I think we're much more likely to be sliding lower, and I'm going to be looking at positions accordingly for that as well. I will be keeping VIP members updated. Ladies and gents, if you've enjoyed this video, make sure you take advantage of your phenomenal bonuses. Check me out on Instagram and Twitter, link down below if you want to see my shit posting. Make sure you like and subscribe and all that beautiful stuff, and I'll see you all in the very next one. Cheers.